All right, welcome everybody to another episode of the Rags to Riches show. I'm the Ragman, and I have a few guests on. I'm going to let them introduce themselves. So, Fuquan, go ahead, tell the people about you.
Fuquan Bilal, Energy Capital Fund. We invest in alternative assets, which is paper, mortgage notes, and also real estate. I've been investing in real estate for about 21 years now, and my heart is still on fire for it.
Mike Teague. Good evening, everybody. Internet entrepreneur, performance trainer, media personality, and investor. And I'm happy to be here. I want to say good evening to Juan, Timmy, and Chris. Always a pleasure. And Elvin, thank you as always, sir.
Hey, we got Chris on the technical. Say hi to the people, Chris.
Hi, everyone. I'm Chris Lacotos, doing technical stuff and design for Smart.
And we got Timmy. Say hi to the people, Timmy.
Hi, everyone. I'm Timmy. I'm working for Smart Realty as CTO, and I'm also working with Chris on designing an app. So we are working on Smart App. You can check it in the App Store. Just type Smart Realty and look for the gear logo.
Absolutely. She's going to be answering questions from people who are watching. So let's kick it off with you, Fuquan. Tell us a little bit about yourself and how you got started in real estate.
Yeah, so about 21 years ago, as I mentioned, I was working in corporate and started to shadow my cousin around doing real estate, and he landed a nice big deal, and it was half my salary at the time. So I decided to start to shadow him around and figure out how this thing worked. And a few months later, I was able to make a big fat paycheck and put my 2-week notice in. I was in 99 and haven't looked back since, and had the opportunity to go back to the community where I was from and revitalize a lot of the properties there. That kind of gave me my fill of importance, developing distressed areas, making a change in the community, putting the properties back on the tax roll and giving the residents a better place to live. But yeah, that's pretty much how I got my start 21 years ago, just being in the right place at the right time, I guess. And I've been through 2 downturns, 9/11 and 2008. Learned a lot through those experiences, and just, pretty much grateful for everything that I have now and everything that I went through to make me, who I am today and the businessman I am today from those diversity, from, going through that diversity.
So for Quan, I'm impressed, man. And it's interesting how things work together because I've been watching literally all week long DJ Envy and his partner, who they call his organization New Jersey Flipping, and they say he's the landlord of Patterson. So my question is, in terms of developing urban areas, what is your strategy for that, and what is your passion with regard to that?
Yeah, so I try to look at areas like I'm from Newark, New Jersey. I know Envy also. I used to actually pay him to come DJ parties for me back in the day. But they're in Passaic County, and the area I invest in is not too far from there, Essex County. I used to do a lot of stuff in Passaic County. Most of this stuff is in Essex County, where I'm from, Newark, New Jersey. And I look at areas that have a lot of blighted properties and dilapidated properties, whether it's through burnout, whether it's through properties that was passed down to family and they couldn't maintain it because of taxes in arrears. So I try to go in and acquire those properties and revitalize them. So it's a need for that in the community. It's a need for people to have home ownership. Right now we have a mass exodus from New York coming over, buying up a lot of properties, increasing the value. And what that's doing now for the community is giving those people who own their house for 15, 20 years an opportunity to refinance and pull money out to do it, get the money they need to move forward. But it's just always a good feeling when you go and revitalize the area, then you just drive through the block and you see a difference in the community. No more abandoned houses for kids to play in and get hurt. And the properties are back on the city tax roll, so now they can generate more income to fix the roads or to pay the school teachers or hire more police officers and stuff like that. So that's pretty much it.
You have the wheels turning, and I think John Bryant, back in the LA riots in 1992, he started Operation Hope, I believe it was, and he said his line, his motto was, "There's nothing wrong with doing well by doing good." So I mean, you're low key about it. I'm sure you've done well doing good. And is that wealth building, I guess, aspiration part of what motivates you too?
Yeah, I mean, for me now, I mean, early on when I got started, I was a slave of money, right? I was chasing money. For me now, it's not about the money. The money actually is a tool to help you do the things you want to do. But the real wealth is within. Let me just start with that. The real wealth is within. And the people who you associate yourself with is very important, because your network is your net worth. But going back to what you were saying about doing that in a community from a wealth perspective, for me, is just the giving my feel of importance to ride through these areas and see that I was able to contribute and make a difference. So that's fulfilling in itself. That's what wealth is to me, being able to have the ability to do that and make money from it. I mean, you know, money is important, of course, is a tool that you can use to do the things you like, as I mentioned earlier. So
I have one more question, and always, Elvin, you know, you always pick the right topic, and now I see the right guests. So the videos that I was watching was about 2 years old. Would you say New Jersey is still a good place to invest in now, in terms of distressed properties, foreclosed properties, etc.?
Oh, for sure. There's so many. There's so many in New Jersey, in different pockets, whether it's South Jersey, North Jersey. There's so many abandoned vacant properties. And one of the strategies that I use is every township have a vacant property list. And you can actually see what's happening with that. What is the town doing with that? Is there a urban development program within that town? Are they assigning a certain amount of properties to developers to redevelop? Because every township have that. So you just got to get in and figure out if they have that program available, and how can you become a developer, get on their list. Of course, you have to show you have a track record, and they will give you opportunities to go ahead and revitalize the area, whether it's land or whether it's vacant properties, blocks of vacant property that you can come in and do 15, 20 properties at a time. So those opportunities are in every community, whether it's in New Jersey, New York, wherever. It's always vacant properties.
So for someone like myself, and I'm sure others who will be watching, who, let's say, are starting on the track, to use your metaphor, how does someone get started with, let's say, one property? If someone sees the bigger picture and they want to become a Fuquan Ali, how do they start without yet having that track record? Yeah,
I mean, again, your network is your net worth. Getting around the right people, and you have to be passionate about it. Like, if you're doing this for money, you're not going to go too far. Of course, you need money to be able to survive, but you should do it with the purpose, and that's what's going to drive you and give you the desire to do it. Then the money will come. But getting around the right people, I tell people there's so much stuff online now. I mean, 21 years ago when I got started, it was really, you had to press the flesh, you had to be out at events, you had to really network with the right people. But it's so many educational tools online, and people you can learn from, and people who wholesale houses, people who flip houses, that you could just sit there and watch YouTube videos and watch podcasts sort of like this and learn certain things. But it's just taking action that's going to make a difference. So I would say you can shadow somebody who's wholesaling or somebody who's flipping, go work with them. There was a book I read, Rich Dad Poor Dad, where Kiyosaki was saying before he opened up a bakery, he actually went and worked for a bakery. And he learned the processes and how everything goes. Instead of just willy-nilly in it, going to open up a bakery, he actually learned the insides of it before he did it. And I would say you can correlate that to, if you're trying to get involved with real estate, go work for somebody who's doing it in your community. Somebody who's flipping houses, who's doing good. Go put some sweat equity and learn the process. Learn how it goes before you go out and do it. That's the easiest way I would say for someone to get started. People just think it's so easy because they see all this stuff on Facebook and the guys with their Lamborghini and saying I flip houses and all this other stuff. It don't work like that in the real world. You got to like roll your sleeves up and get busy and put in that time. And again, it has to be something you're passionate about.
Thank you.
Now, Fuquan, I know that you know, you were on Facebook. You advertised, you did a major deal. Was that? Tell us a little bit about that deal, and was that the biggest deal you've ever done? I think it was a few multifamily properties you sold for like 1.5 million. Tell the people about that.
Yeah, so that was actually a tax lien that I purchased. So again, when I was talking about the vacant properties, I went to the township and was able to figure out the vacant property list that they had. And then I found out that the vacant property had taxes that was backed up and it was going to sell. So the township has what's called a tax sale auction. I attended that. One of those properties, fair and square, outbidded everyone. And then went to work, had to go through the foreclosure process to get the property, and then I renovated it. And within 19 months, I was able to sell it for a significant amount. I mean, COVID helped with a lot of that because it created a bottleneck and it created a shortage of inventory, which created a demand, which increased in values. And like I mentioned, we have a mass exodus of people from New York coming over, which that's nothing to them, right? $1.5 million is nothing to a New York. That's like a 3-bedroom brownstone. So that it just gave opportunity all around the place with the wind in my back. But no, that wasn't the biggest deal I've done yet. I've done a few other deals a little bit larger than that. The reason I actually share that with everybody is to show them, look, this is where I come from. I put time and effort and energy into this, and this is the result you can get from it. So I try to share some of my wins with people on social media. And I kind of use social media as like a customer service portal. People reach out to me to ask me questions. I help them that way because I don't have masterminds. I don't have mentorship programs. I don't sell education. I don't do any of that because I'm so focused on what I'm doing. So I help people through social media. Like the question asked me, how do one get started? I'll usually give them the information through social media, through Twitter, LinkedIn, Facebook, whatever. They hit me up. I'm always active on it. And answering questions. Like I'm like 15, 20 people may hit me up, may build up. It may take me a day or so to get back to you. But when I do hop on, I just answer questions and point people in the right direction.
Well, you know we're not gonna let you off that easy, right? You gotta tell us the numbers, bro. So how much did you get the tax lien for? How long did it take? Yeah.
So all in was about $750. The tax lien.
You bought it for $750? You bought what you get the tax lien for?
The tax lien. It was 2 separate properties. The tax lien one was $160,000. The other one was about $105,000. And then with renovation, the holding costs, everything all in for both properties was about $750,000. And I sold one for $1,050,000 and I sold the other one for $475,000. So together, that's $1,525,000. And that was about 19 months that it took.
How many units are you talking about?
That was only 10 units.
10 units?
10 units, yeah. 10 units. But there in the back of the 6th unit, there was another piece of land that was 50 by 100. Actually, no, 100 by 100 lot that was behind it that had an old service garage. The city used to service their police vehicles and stuff in that garage back there. And you can knock that down and you can build 15 more units. And that was the original plan. But I was like, I just want to grab the bag now and run instead of trying to go through zoning and go through variance because everything is slow now because of COVID. Everything is moving at slow speed, and it would take probably 8 months to get in front of the board to get it approved to start developing it. And I figured, since it was a shortage of inventory in the market, let me put it out and see what happened. So that was what happened, and those were the results. And again, it's just from the grit. It's just from staying focused and building mastery and having the right resources to plug into.
Absolutely. Well, look, that's a big number, and so people looking at that, they're probably going to say, well, man, this, I'm not sure that's something I can do. That's such a big number when you talk those numbers. But, tell us, like, how did you get there? Like, how did you get to the point where, look, I could take this down. I could, have $750,000 in debt, basically, that I owe. Like, was there no fear in that? Because that's a big number, having that much debt. Or was it just, look, I'm going to do this. I'm going to, I know what it's worth. And you just went for it. Like, or was it, how did you get to that point where you're so confident in yourself to just take down big deals like that?
Well, debt is good, actually, especially now since money is so cheap. So let me ask you, if you owe somebody $750,000, don't that put pressure on you? Does that make you want to? So that is actually good because it makes you do things that you wouldn't normally do if you was in your comfort zone. So you have to be comfortable being uncomfortable.
Exactly.
Right. And then that kind of pushes you. You always have to go outside of your margin to be uncomfortable, because it pushes you to do things that you wouldn't normally do if you were comfortable. A lot of people just want to be comfortable. I always want to be uncomfortable. Right. So for going back to the finance piece, though, just being in the right circles and being around the right people was able to connect me with certain lenders and certain people that will lend on the asset. You don't even have to really have to have perfect credit to put yourself in a situation like that. You just have to present the deal to a lending institution where it makes sense. So if you get hit by Amazon bust, they can actually come in and take over the deal and, you know, continue to go. So they will lend based off of the property and not you. So you find a lender that will give you money on a property that it makes sense. So you put the renovation budget together, you put the holding costs together, and you present the package to them. And sometimes they'll lend 70% of the ARV, and they'll give you construction drawers to go along with doing that deal. Or you can partner with somebody. You can find somebody who has the capital, you put in the work, and you guys create whatever split you're going to do and pretty much go from there.
How did you take down that deal? Was that private lending? Was it, you know, bank financing? How did you go about getting that? You know,
yeah, I have a fund. So this, I raise capital through a private fund, and I pay investors a set return. Accredited investors only, they get 10% annually on their money, and I raise money, and basically that's how I buy my transactions. So on one-off deals, I might have a private lender who might lend some money from their IRA account, you know, for smaller deals. But for a deal like that, I'll just buy in under the fund and renovate it. I may use a lender to refi me out after I buy it and do a first, second phase of renovation. They'll refi me out, give me my money back, and have a loan on it 60, 70% of the value. So that's typically how those deals are structured.
I mean, to do a fund, you have to do some like SEC requirements. Like,
Absolutely.
how did you set that up? And
absolutely.
And tell us the name of the fund in case somebody want to invest in it.
For sure. It's you go to nngcapitalfund.com. This is actually my fourth fund. This is a small fund. It's only $15 million. And basically the process of that is, well, the short of it is when the market crashed, I was doing short sales. And at the time, my son was 12. No, my son was 8. I'm sorry. My son was 8. And he basically heard me arguing with the negotiator on the phone, trying to get a short sale done. And I was like, man, these banks don't want to give you a break. They don't really want to give a homeowner a chance to do anything. He said, why don't you become the bank? And I was like, that's impossible. With that, he said, everything is possible. Like, how is that impossible?
Wow.
Oh, wow. Now I gotta do something. So
now you gotta give him something because
yeah. My 8-year-old son at the time.
Wow, be the bank.
And he was 8 at the time. He's 18 now. He'll be 19 soon. But I started to research, and the first thing I came across was how hedge funds operate. Right. So hedge funds basically they create a vehicle where people can invest in a vehicle, and then they take that capital and then they deploy it into assets that will give a return to the vehicle and then ultimately give a return to the investor that's in that vehicle. So I went that route and learned about a private placement memorandum. I consulted with an SEC attorney, $350 an hour at that time. Now he's like $500 an hour, but at that time it was $350 an hour. And he just gave me the blueprint. He said, this is what you need to do. You don't need any special licenses or degrees or anything. You just need to make sure we file and register this way, and we put together your operating agreement, and you have your business plan. And it cost me about 25 G's to set it up. And once I had it set up, then I had to go raise the money. And it took me a year or two to really work with that. First, I went to friends and family, and then raised some capital through those channels. And I was already flipping properties before, so I had the ability to take the capital, deploy it, and do it. But now I just created a vehicle to do it at a larger scale. I don't have to go onesie, twosie, borrow money from people doing private lending deals. Or sometimes you have a deal lined up and a private lender changed their mind last minute. This allowed me to raise money and pool money together and then take that capital to go buy individual assets of my choice. So once I kind of learned the nuances, that's a whole separate business, raising money. And it's something I'm still learning today. But once I kind of learned that part, it just became my focus. And I use that now as a bank to go ahead and buy assets that that I've searched for, whether it's tax liens or real property or notes. So that's the gist of it. You can consult the SEC attorney there they'll give you the ins and outs, and you can set it up that way. It's not difficult. Again, it takes the time to really focus on it. Anybody can do it. Like,
absolutely.
Elvin, can I jump into the question?
Sure, absolutely.
Oh, Fuquan, two things. First of all, I apologize for mispronouncing your last name. It's Bilal. My apologies.
It's all right. We're not our names. We're more than that.
All right. I thank you. So I deal a lot with mindset as a internet entrepreneur, as a performance trainer. Can you, it's shifting gears a bit, but it applies to what you're talking about. How do you sustain a mentality of being willing to be comfortable with being uncomfortable? I've actually done podcasts about that. Can you talk about that?
Yeah, so I did mention I'm from North New Jersey. I mean, I grew up in the 80s, and when you come out your doorstep, you have the needles from the heroin addicts and the crack valves and all that stuff. So growing up in adversity, it's the only way is up, right? So for me, coming from that environment and then being able to get into a different environment, I've always been into sales where I can thrive. Like when I was younger, my mother used to take us out to the bazaars and the flea markets to sell. We grew up in an Islamic community, so we would go out to different events and sell incense and scarves and hats and all that stuff. So she actually instilled into us, the mindset of being a businessman at a younger age. I remember at like 11, 12. So that's what really made me fall in love with sales. So when I was able to get out of that environment, I had to educate myself. I read a really good book by Maxwell Maltz. It's called Psycho-Cybernetics. That's a really good book on mindset. And basically through self-education and again, being in the right environment, I kind of learned that everything is mental, right?
Everything.
Yeah, everything is mental, right? I learned not to let external factors control my emotions. That was a really big part for me, to help me not ruminate over certain things. And, every day is day one mentality. So just keeping that mindset and self-educate myself and being in the right environment, I guess it just eventually molded and shaped me into who I am. And creating rituals in the morning where you do meditation, reading, journaling, exercising, just a habit of those things every single day, it kind of developed the core, and it keeps the equanimity, the mental equanimity in place, so you can actually thrive and focus on the things that you want to do. So, always being grateful for things and just having that mindset is important, and always really trying to see how you can help others, right? I'm a big proponent of that. How can I serve? How can I help others to kind of get that reciprocity factor in place? So that's my whole process of how I operate, basically.
Interestingly enough, too, and this is I resonate with this. I've studied high net worth individuals, and even though they'll give us the game, so to speak, regarding business, it's all about mindset. Whether we're talking about Grant Cardone, whether we're talking about Gary Vee, they always talk about mindset. Here's another thing that I thought about, and I have a question. Any entrepreneur, whatever the space is first and foremost a salesperson, right? So we can outsource anything except sales initially. Eventually, we can hire a sales team, but initially, we are the salesperson. One of the things that you said earlier is that you had a background in sales. I'm in sales also. So can you talk a little bit about the sales? I would say the sales mindset. That yes, I may be financially advanced, etc. At the end of the day, when you with that fund, you have to sell people. And so can you talk about the sales process? I guess that's the best way for me to ask the question.
Yeah. And also, how did you use those sales to pull off, getting people to lend you $15 million? Because I definitely people want to know about that. Yeah, again.
Yeah, so it's all about what give people their feeling of importance, right? So when I connect with the person, I always try to figure out what makes them tick, right?
Exactly.
And if you figure that part out, and then they're a friend for life, so to speak, because it's always what's in it for them.
Exactly.
So I never walk into a room and say I want to raise money. I walk into a room and say, how can I help these people here, right? Even when I go to the city and I'm looking to get something from the city, maybe what's the vacant list, when is a tax auction, but I'm going in there first and saying, what can I do to help you guys with what you're working on as far as development? Like, I'm an investor, I have this experience, but what programs do you have that I can help with and contribute towards to help you get your outcome? And when you're going with that approach, you're always going to get, you know, what you need when you go in to help. So the same thing with sales is the same thing. You know, what can I do to help? How can I serve? Whether you go in with that mentality, you always win, right? And always having 2 ears and 1 mouth, you know, listening before you talk. A lot of people want to get their point across so much, but they don't listen. Like, that's the main #1 thing with sales is being a good listener and being able to figure out what gives them their feeling of importance and then making that happen. People resonate with that.
Love it.
You know, yeah, that's
respect, man. Yes, sir.
I got a question on that though. If Mike, sorry about that. I got a question on that. But you know, for a person to give you money though, that takes something else, right? Because it's a little bit more than sales. Because if they got money, you know, they've probably heard of knowing sales. It's definitely about you know, trust and your background. I would imagine if you could speak on that a little bit.
Yeah, for sure. Like I said earlier, raising money is a whole separate business. It's a relationship business. So you're not going to meet somebody and then a month later they're going to give you money. You know, you really have to show and prove who you are. So I always go over the hill and get the arrows on my back first in any new investment or endeavor that I do. So when I did the taxling thing, I went to the tax auction myself with my bag and invested, and then built case studies. And then I put stuff on social media. Look, this is how I did it. And then after I had a few case studies, I was able to go to people who I knew and say, hey, I'm going to this next auction. Would you like to participate? This is the results that I got. And this is, of course, people who knew me already that I had a track record with. But to answer your question is you have to build a track record. And how do you do that? Create relationships. So if you're just getting started, instead of looking for a private lender to lend you on your deal, partner with that person. Offer that person a percentage of the deal so you can create a relationship with them. And then once you have that track record with them, then they can vouch for you because they'll be your biggest cheerleader. You pay them on time, you cut them into profits. And most people want to be in the profits. Like I had so many people hit me up after I posted that deal, say, hey, how can I get some profit participation? You know,
right. Profit participation.
Yeah, I don't do profit participation. I just pay like a straight 10%. But people see those numbers that big, they're like, I want a piece of the action. But you know, if I was starting off in the beginning, I would have had to do that. But now that I have a track record, I could just have the person be the bank and lend me money and pay them a nominal interest percentage where they're happy and they can grow their money, which is somewhere around 10%. And I don't have to give them half the profit. But you know, some models you have where you get us getting started, people don't know you. The way to make them move a little bit quicker is by cutting them into the profit and doing a profit share model, because now the risk is down a little bit because they're getting a bigger piece of the action, but they could be your biggest cheerleader also. So you don't have to score a home run in the first few. You can use the first few deals to build your track record and build those relationships. And then, you know, you get referrals from them. Hey, do you know somebody else who might, you know, want to make those returns that you're making? Let's bring them in and let them partner with us on the next deal. And then it just happens over time. It's a relationship business, and it happens over time because people are going to lend to people who they know, like, and trust. And they're more so going to lend, they're going to give you money based on you and not what you're invested in.
Well, I'm sorry. Go ahead, Chris. Go ahead, Mike.
Yeah, I was going to say, and Elvin, thank you. I was going to say, so much of what you're saying rings true regardless of one's industry. You know, we do business with people we know, like, and trust. George Foreman is famous to have said, when I buy a pair of sneakers, I don't buy the sneakers, I buy the salesperson. And I think for Quan, what is most important, I think for the Gen Z and millennial generation, what you're stating it and talk about it more. It's a process, right? Like Meek Mill said, I'll delete the expletive. Like Meek Mill said, there's levels to this. I mean, 21 years of consistency is a long, long time. And so people see you now, right, with the success. Not to say you weren't successful before, with the $1.5 million deals, let's say, with the $15 million real estate fund, you know, but you had to start somewhere. So can you talk a little bit about your start for those who don't understand that, yes, there is the outcome, there is the payoff. You start somewhere, and you got to be consistent to build.
Yeah, I just want to keep mentioning it, that those numbers are very small. Like, I guess for somebody who's not into real estate, looking at that, 15 million is not a lot of money. Like, I would, for me, $100 million fund is like, okay, now we're talking. $15 million to me is like, I'm still just getting started. Even though I've been doing it for 21 years, that just only mean that, you know, people trust me with $15 million of money, you know, to manage. But I know my self-worth. I can manage more than that, but that's pretty much really where I'm at now and today. So I don't want people to look at that and say, that's small. People should be looking at running $100 million fund, right? So, you know, that's the one to put that out there. But your question was
your process. You know,
get into that. So it's really creating mastery, right? There's a great book by Gary Keller called The One Thing, and I would tell you guys to read that book because it's really good. It just really teaches you how to drill down and focus. That's important, to have focus and clarity. A lot of people get caught up with the shiny object syndrome. They want to do wholesaling. They want to do this. They want to do that. And they really don't go deep. They just go wide. And then they're a master of none, right? Jack of all trades, master of none. So staying focused and building mastery and developing processes and systems, getting educated year by year by year by year by year. I just actually implemented something in my company called EOS, it's the Entrepreneur Operating System. And it talks about everybody being on the same page, speaking the same language, because you have in some companies, this person do it this way, this person do it that way. So that goes back to what I was saying, systems and processes. If you create that, then it allows you to create mastery and allows you to scale. And you should always be scaling to be better. You know, scaling to be better instead of scaling to be bigger. But I mean, it wasn't 21 years of joy. You know what I'm saying? It was some painful days, some ups and downs, especially when the market crashed. I lost $2 million of my own money in 2009. I paid all my investors. I didn't file bankruptcy. You know, I lost money that I had in deals and literally had to start, you know, from scratch. But that was the best thing that happened to me because I'm way past that now. And I learned a lot from that. But I would just say, try to create mastery, develop processes and systems so you can scale. And, you know, just be transparent, be honest with people. My 3 core values in my company is performance, accountability, and transparency. And we live up to that, you know, each and every day. And when I hire based off those core values. When I fire based off those core values. When I look at business strategies, I do it based off those core values. So it's important to have that as your foundation in order to grow.
I got a question. I got a question for you. So what are some of the lessons that you learned? You know, you mentioned, you know, learning some lessons, especially from the last crash. What are some of the lessons you learned and some of the things so people could avoid not making those mistakes?
A mentor, you know, finding a mentor, I think is important. A lot of people don't want to spend the money to have a mentor, but when you have a mentor, what you're paying for is speed.
Yes.
You're paying for somebody who have experience, somebody who can help you, you know, through the pitfalls. And a lot of people don't realize that they want to do it on their own. I was like that too. I'm just going to go to Barnes and Nobles. I don't even know if they're still around, but because Amazon is everything. I'm gonna go to Barnes and Nobles and buy a book and I'm gonna figure this out myself. Like that's how I operated for years, right? For years. I would say the first 15, 12 years of my career, I operated like that. Like I don't want to pay somebody to do something. I'm a reverse engineer. I'm gonna buy the book. I'm gonna figure it out. And I was always good at that, but you can only go but so far doing that. And you know, recently in the last couple of years, I hired a business coach to come in and look at my business from the outside in and tell me the things that I needed to do in order to scale, to be better instead of bigger. So hiring a mentor is one of the things that I would say that I should have did earlier on. The second thing I would say is being a part of the different network groups. Like when I was flipping properties, you know, I was a millionaire when I was 28 years old. So I thought I knew everything. I had the latest car, traveling in Europe, doing this and doing that. Nobody can tell me nothing. But I wasn't connected in the crowds where they was forecasting markets, where they was talking about things that was happening, like the real estate REIAs and stuff. That's what I'm talking about. I wasn't part of that. So being around these type of people now kind of keep me abreast of what's happening in the market. And that was a big mistake I didn't make before, because I think I could have maybe not lost 2 million, maybe I'd have lost a 1 million or $500,000. Something would have happened because I had so much inventory. I would have took a loss somewhere, but I would have been able to shift and pivot by being a part of that real estate community. So I would say definitely, whatever industry you're in, you need to be tied into a network to keep yourself abreast of what's happening in that market. You need to have a mentor. Those are the two key things that I would say. And one other thing is focus. My focus was all over the place. I had barbershop, beauty salon, transportation company, car wash, real estate. I was all over the place, right? I was just doing all this stuff. It was generating money, but I had 54 employees, and it was insanity. I was a slave of money. I wasn't a master of it.
Wow, that's powerful. Slave of money, not a master. I got to use that.
most people are. They don't realize it. They chasing money, and when you make money the goal, you never have it.
I like that.
All right. Mike?
It's true. It's true.
So Fuquan, I'm loving this your content. So Mark Cuban and Mike Dillard. Mark Cuban, of course, the owner of the Dallas Mavericks. Mike Dillard was really a guru in the internet marketing space back in the early 2000s. They both talk about the importance of skill set. So we have a guy, Mike Dillard, who's probably earned with his business about $60 million. Of course, we know Mark Cuban's a billionaire. In real estate, what's the skill set? Like if you imagine a toolkit, what are those tools that constitute the skills that the real estate investor needs to have starting off?
Yeah, so somebody, of course, who's good in sales. I would say if you was looking at a profile of somebody who's like a profile as a captain. I'm really big on a predictive index as a system that most corporate companies use when they hire people, and they take these questionnaires and they kind of give each person a profile, captain, maverick, stuff like that. So I would say somebody who's a captain is a goer, a doer. Somebody who's going to take action, grab the bull by the horns, and go. And just having the right people in the right seat. So the skill set would be somebody who's an action taker, somebody who's green, who's willing to be able to learn and adapt. I mentioned sales already. Somebody who's good at sales. I would say those are the key things. Somebody who's willing to listen more than they talk. They're always going to be willing to learn. And I would say pretty much that's it with real estate, because if you have those key elements, the sky's the limit where that person who have those skill sets can go. Of course, if you're talking like technical tools and stuff, learning Excel and all this other stuff, that's a necessity. But a lot of that stuff you can learn online now, and that's any green person who's hungry can do that. I don't know if hunger is a skill, but definitely somebody who's hungry.
I think
like Les Brown said, you got to be hungry.
Yeah. Yes, I agree, and I think skill set is so vitally important. Mindset, skill set, right? And two, I want to commend you, and Elvin, this is more of a commendation of the question. I want to commend you for hiring a business coach and hiring a mentor, and I think we can't do things on the cheap, right? And Diddy, he's going to be a billionaire if he's not already, right? Ray Dalio, who many have argued has the most successful hedge fund in history. Diddy reached out to him, and that's his mentor. So we all need somebody at the next level to help us get to the next level, because in a real sense, as you said, it slows down the trial and error process. So how would one go about finding a mentor in their chosen space?
Yeah, there's so many out there nowadays. Depending on the sector you in, it's so much information online you can find, and you can just tap into different people. Oh man, it's so much stuff out on social media now where that's pretty much easy to find. You just have to make sure you vet that person out to make sure it's just not someone who doesn't share the same values as you do. So that's really simple. It's just whatever industry you're in, if you're in those networking groups, or somebody who you admire, figure out if they have a mentor and, what services do they charge. There's a bunch of different companies out there that will do business coach and mentorship programs. So it just depends on what industry you're in. I'm pretty sure that you can easily find someone that you can vet out and figure out they're the right fit for you. But it's definitely a necessity because you need somebody to keep you accountable to help get you to the next level. You got to have that accountability partner in place.
Love it. Thank you.
All right, absolutely. So this is very good, man. Good information. And, you know, I'm very proud of you because, you know, I've been watching your career for a long time. I think we met probably about 15, 16 years ago when you were, I think you were pushing notes then. And one of the audience had a question about notes. Timmy, if you could ask that question.
Yes, so how to buy mortgage loans, that was the question.
Yeah, I mean, there's forums and LinkedIn. There is a bunch of stuff online. There's one company called paperstack.com, STAC, paperstac.com. And it's like an exchange site where you can buy one-off notes. But before you buy, you definitely want to get educated. I'm going to type here in the chat. A buddy of mine, he runs a mentorship. It's called fixnotes.com. I think that's it. It's Fix Notes or Fixing Notes, one of those. My buddy, he runs that, and basically he has like a mentorship program. It's fairly cheap. It's like less than $100 a month, but it's some high-level people in there coming to share their experience. I'm a part of that mastermind group. They do it the first and third Wednesday of the month. Sometimes I attend a call to learn stuff myself, and sometimes I attend to add value to the call as well. But get a part of a mastermind group and learn about it if you don't already know before you go and deploy your capital, because you can't lose money. So you definitely want to be educated before you start going and buy notes.
Absolutely. Yeah. I mean, you know, one thing about the notes, I think the first note I purchased was a second mortgage. And, you know, that's a long story. But I remember I negotiated the note. It was such a great deal. And the lady who we were trying to work with at the time told her attorney about it. And the attorney back-ended us and went and bought the note, you know, because we're getting the note, I think, for $2,000, like $100,000 note. Just ridiculous numbers, like, you know, unimaginable, right? And I'm sure you've seen crazy deals like that. Tell us a little bit about some of those note deals that you've seen where they've tremendously reduced the amount of the note.
Yeah, I don't know about tremendously reducing the amount of the note. We never reduce principal, but we've been in opportunities where, if you're talking about reducing as far as buying at a discount.
When you bought it, yeah, bought it at a discount.
Yeah, we purchased, one story is I purchased, because I always purchase in a pool. That means a bunch of notes in one bucket. And this particular house, there was a fire at the house, but I bought it in a pool, so I kind of zeroed it out. And the loan, the unpaid balance was like $80,000, and we had a realtor call us maybe 3 months after we purchased the loan and request a payoff. They said they wanted to do a short sale, and the first lender, it was a second mortgage. The first lender was only going to give us $3,000. So we went through the whole process that I used to go through. Okay, send us the HUD, send us the payoff from the lender, because usually when you do a short sale, they give you a short sale pre-approval. He couldn't produce that. And the person in my office, he offered up to like $15,000. And again, we zeroed this loan out. So we probably had on our books for like less than $1,000. So the asset manager was like, hey, are you crazy? We got it for less than $1,000. We should take the $15,000. And I was like, well, we have a process. The process is they send us the HUD. We look at the short sale pre-approval. They send us the contract. They send us the package. We are the bank. So they're supposed to send us the package just like they would do. He couldn't produce. So I found out who the title company was. I called the title company and found out that it was actually an insurance claim. The father that lived in the house had died because there was a fire. He died of smoke inhalation, and his life insurance was paying off all the mortgages on the house. So they had access for a payoff, which was at the time, I bought the note for 80. It was 80,000 UPB, or was into it for less than 1,000. The payoff was like 110,000. So we gave her the payoff, and we got paid the $110,000 from the insurance company on a note that I purchased for like less than $1,000. That's the biggest lottery payday ever.
I don't know what's the return on that. I don't know what the return is on that.
It's
too many zeros.
It's called infinite.
Too many zeros, man. But wow, these are, and
but that doesn't happen. That doesn't happen every day. I don't want people out there thinking, "Oh, let me go get $1,000." That doesn't happen every day. That's
of course. You got to be like in the position, like if you're grinding and grinding, eventually you come across those unicorns. Talking about going big. I want to just show something here on the screen. See if you can pull it up. Yeah. So what about when I met you about that time? Me and my brother used to drive something called the Rag Bug. I don't know if you remember that. Had to be by Raggedy Houses on the side. I don't know if you ever saw it. Driving around Essex County, and we were ready to franchise our company. We were like working on that. That was like we had built the systems and everything, put it in place, and then I think it was $500,000 was what we were told we would need to go nationwide. So we were saving for it. And of course, the crash happened. And instead of taking that money and being able to franchise, we lost $5 million. So I know you said you lost $2 million, we lost $5 million, right? But we were able to pay back our investors. Just all the equity was wiped out. And thank goodness we paid off our investors. So just recently, actually, what day was it? Tuesday, Timmy? Or Wednesday? But we just put up the first billboard, and it's up right now. We just started to put them in Essex County. We're doing 10.
Day before yesterday,
Wednesday. So we just said, you know what, let's go for it again, right? And this time though, of course, we're not going to let a recession stop us. In fact, if a recession happens, we're going to deep dive into it, go harder. So I just wanted to show that to the people that it takes I've been doing this for 20 years, and Fuquan, you've been doing this for longer than me, right? How long you been doing this for?
21, just 1 year more. So it's 99.
Yeah. So, definitely you've been doing it, grinding this. So, there's a lot, you take what? 2 steps forward, you get that push back, So I just want everybody to know you just got to stick with it. There's no get rich quick scheme like people are pushing. Fuquan has really been working at this for a long time and mastered his craft. And, so I just want to take my hat off to you. Chris, you got a question?
Yeah. Basically, I would like to ask a question about for new real estate investors of how to handle today's real estate market, right? Should we fear more real estate crisis? What are the positive and negative aspects of the market so that we can deal with this today's situation?
Yeah, that's a great question, Chris. Is really the last downturn was done by the actual real estate market because of the loans the bank were giving out to people who really couldn't afford them, and the type of financing they had in place. So they were just giving loans to anybody, and that is what caused the market to crash when people who they gave loans to couldn't pay, and their bonds started to collapse, and it just created a whole mess. So the underwriting process is a little bit more different nowadays, where the banks are being a little bit more conservative. There's some programs that are lenient, but the paper is being underwritten better than it was back then. So I don't think that, in my opinion, that the real estate is going to be what caused the market to crash. There's a lot of helicopter money being thrown around by the government, which is definitely going to cause inflation. The market is actually getting stronger at this point because of there's no inventory on the market, right? So values are going to keep increasing as long as the demand up. The only thing that's going to bring it down is when interest rates start to increase, which they are little by little now. You'll see prices like stop rising because the interest rates are rising. And you'll see it kind of level off. And you'll probably see small dips in value, maybe 10% at the most, but nothing more than that. I don't think it's going to be a major crash like it was before. There's a bubble looming. And I say that because of the foreclosure moratorium, and everybody is saying, when is that gonna pop? Is it going to be 2 years, 3 years? I think we have a good, strong 4 or 5 year run, and the reason I say that is because of how the economy is continuing to be stimulated, And with the current administrator in place, they're going to have all these programs, and they're going to offer landlords money, banks money. They're just going to keep, quantitative easing and printing money. So I think that it is probably a good 4 or 5 year window before we see anything, and probably foreclosures will catch up by then. But the amount of inventory versus what is in foreclosure, it's going to take time to catch up. So I don't think the inventory is going to catch up to the demand. It's going to take years for that to happen. So I think the market is going to stay strong for a bit. Now, nobody knows that. Nobody expected COVID to happen. So if there's another virus that comes out and slow things down, I think more so the retail market is being affected, the restaurants and things like that, the real estate that's in that arena, people are being affected, the senior home living care facilities and all that stuff, that sector of the real estate business is taking a hit. But the regular affordable home, low income housing, it's on a boom, especially in the markets where values are less than 300,000 or more. Florida, Ohio, those areas, they're really good. The Carolinas,
Fuquan, I have a question. When the market crashed, everybody wants us to celebrate the win. How did you respond to that? How did you recover from that?
Are you talking about COVID?
I'm talking about the market crash.
08. Yeah. So how did I respond? I didn't respond. I didn't know how to respond. It was the first really big downturn because the real estate was 80% of my income generated. So I told you I had all these other businesses, and the real estate was feeding those businesses. So I was in situations where I had like 7 closings lined up, and then one after the other, it was like the plug getting pulled, the lender not financing, no more financing available. It was crazy. So I didn't know how to react. I kind of just sat on my hands and didn't know what to do. And it took me some time. I was still liquidating stuff and trying to work out the issues that I had over the next couple of years. And I didn't really pivot until like a year and a half, 2 years later, when I started to do, get into understanding notes, and I still was doing short sales. But how I came back from that was really going deeper within to myself. And that's when I started the foundational work, the meditating, the journaling, the exercising, and really changing my mindset. I think that was really how I bounced back and started to put myself around other people, positive energy, not negative people and everything else. I think that's what kind of made me grow, because I put myself in a position where I was uncomfortable, being around different type of people that was way more successful than I was. When I would walk in a room and be like, I don't belong here. I continued to go to events like that, which eventually molded and shaped me to want to become more. So that's how I changed personally myself. And, just with research and development, I really was trying to really figure out, trying to build a defense mechanism. And I just went hard, right? It's like I call it PTSD. Like it's weird to explain it, but once you go through what I went through with that, with the divorce and everything else and losing the money, that was really like a wake-up call for me. It was like a punch in the face, and I never want to see myself there again. So it became like 25 ain't no breaks, nonstop. Just go mode all day long, waking up ready to go.
I remember actually the funny thing about you speaking about that situation. I think it was around 2010 or 2009, something around that time, where I spoke to you once. I was on I had a list of defaulted loans or something, and I think one was your wife or ex-wife at the time, and I spoke to you about it. I think I messaged you about it, and you said, "No, don't worry. I'm gonna get rid of that default, that mortgage, right?" You said mortgage. I'll wipe that mortgage off the property. And I said, "What? How are you gonna wipe the mortgage off the property?" I think this is probably when you had a situation, and you You said, no, man, I'm gonna get rid of that, you know. And I went ahead and I was like, man, what's he talking about? You said something about forensic audit. So I went ahead after you told me about that. I think I went ahead then and started studying how to do forensic audits, and you know, with some loans, taking them off the properties, etc. Can you tell me a little bit about that? Do you remember that situation?
Absolutely.
Yeah. Because I actually
So
heard that from you telling me that. I went ahead and studied it after that. Yeah.
Yeah, that was prominent in that area. So when the market crashed, there was a group of people who was trying to reverse engineer the 424B5 perspective. So it was a REMIC, a real estate mortgage investment conduit, that the banks will pull these loans into, and then they would create these bonds and they would sell bonds. And it was like strict rules that they were supposed to follow. And if your loan was in that pool, you can really do like a forensic audit to figure if your loan was in that pool, if it was securitized, if it was sold. So if it was within that pool and it was securitized and sold, certain parties didn't have the right to foreclose. So I began to understand that and begin to follow that and investigate that. And then I went actually and got certified. I went to Chicago and got a certification in it. It was forensic. Yeah, I went through that whole process, and I learned about that. And then I started to help people. Like I was saying, you know, helping people. I started reaching out to people who was in trouble, started to help people. And that's when I was doing short sales. And like, well, you really, you know, if they don't have the original paperwork, that was number one. You know, let's write a letter to them and see if they have the original documents. Because if they don't have the original documents, game over. You know, then if they do say they got it, okay, let's send them a letter to have them proof it. And then you had the right to have them send it to an attorney, and you go there and examine your documents. So because they was using mirrors and they was recording it through the black cloud. So because it was never recorded at the county level. Right. So you would originate your loan with one party, then they would sell it off to like so many different people or break it up. It was never recorded into the system. So they had to show there was the holder in due course, you know. So when they couldn't prove that, then you had the right to do what was a mortgage litigation and fight it to have the mortgage quiet title off the quiet title of the mortgage. A lot of people didn't even know that. A lot of people still don't know that now.
Yeah.
So I learned that and understood that, and then I began a movement to help people to do that. And you know, it was at one point where you would have people who would started gaming the system and they're strategically not paying a mortgage, and then at the last minute want to run for help. And you know, it was just something that I really didn't see myself being into for a while. It was a great education experience that I learned, and it was originally for me to learn how to really help the situation that I was in, that I was actually able to work out. So yeah, I was able to work that situation out.
I remember actually a lot of people, their loans were so messed up. I remember there was one couple. They actually, I think your property was in South Orange at the time, and they were around the corner from you, and they had 3 different lenders foreclosing at that house on the same mortgage at the same time. It was just a total mess, you know. So you know, I don't know if all of that's even been cleaned up. I'm not even sure if all that's even been cleaned up. Yeah,
you would notice it when you would see it was in a trust. And it would say trust 2007 series such and such. That was like a red light, a green light. Okay, that's one of those type of loans that, you know, you can actually go through a process to have them, you know, prove they are who they are. And a lot of people were successful with that. A lot of people got foreclosures extinguished, thrown away. Some people was not able to get the mortgage off their house, but the judges ruled that entity couldn't foreclose. So, you know, they still have a lien on their house because the mortgage is not discharged, but they didn't have to pay anybody, and that person can't foreclose, so they just live there for free. They will never own the house, but you know, they're not paying anybody; they're just paying the taxes at that point.
Yeah.
So yeah, that was actually fun back then. It was a really good education process, and that actually taught me more about the note business, because when I started to buy paper, I was able to use that, what I learned, as a due diligence tool to figure out, like on loans, when I bought seconds, if the first was unknown, I was able to put the MIN number from the mortgage into the mirror system and see who the master servicer was, and then kind of find more information out that way.
Are you still doing it? Are you still buying notes, or?
Oh yeah,
For
sure.
sure.
Okay. Still buying notes, yeah. Our model now is we buy notes, we buy tax liens, and we also buy real property and flip.
Okay. How long does it take from the time you? Well, I know some of the loans you work out. Now, what's more profitable? Is it more profitable get the loan at a discount, work out the principal payments with the borrower, or is it better just to get the property and reflip it? What do you find is more profitable or more stress-free, less risky? What are your thoughts?
Yeah, exiting through the homeowner is always profitable. And I like the fact that I can actually help the homeowner stay in the house, give them a reprieve, and work out a solution that's amicable for both parties. So to me, again, like when I used to revitalize the properties in my community, that gave me the feeling of importance also. So any exit through the borrower, whether it's a discounted payoff, short sale, or a modification, that's always, to me, the most profitable one, because I was able to help somebody create a solution.
Do you have like separate entities and other people that run them, or you run all the companies? How are you managing all these different businesses? Note buying, tax lien investing, house flipping. How are you doing it all? What's the system you're employing?
That's simple. You can have a holding company that manage those companies, and the rest of the companies individually.
Okay. So you got a lot of managers under you now, or you kind of just oversee everything?
No, we have a team. I was the one-man show a long time ago.
Yeah.
We have a team of 11 people right now.
Mm-hmm. Absolutely. So I don't know. Mike fell off. Trying to get him back, but yeah. So Chris or Timmy, do we have any other questions?
Yes. Yes. So what do you suggest, for example, someone who is like starting with properties investment, right? Like what is a good investment, or what he or she needs to focus on? Like what are the habits that are most important, for example, an investor to be successful?
Yeah, that's a great question. I think that it goes back to what I mentioned earlier, really finding out what makes them tick, right? Why are they doing this? What is the purpose? And then everything is based off of that. What are their core values, and everything's based off of that. I wouldn't get involved in it just thinking about money. I would get involved with it thinking about what value you can add.
Right.
And then the rest would come from there. So the type of investment you would get involved with would be based off of what you currently can afford. The type of lenders that you have in your database that you can reach out to help you finance stuff. Whether you want to, if you're talking strategy wise, if you want to buy something for cash flow, if you want to buy something for flip, and that's a personal thing that they have to figure out based on their needs and what they're trying to do. Wholesaling is transactional, so some people gravitate towards that because they can make chunks of money at one shot. But I would just basically say that you definitely need streams of income. But until you start to go the passive route and start just generating rental income, you need to get some flips so you can get those big chunks of cash. And then you can learn how to bring the rentals to bring the cash flow in little by little. So I would say first figure out what's important to them and why they're doing it, and then go ahead and place the strategy.
Right. And you mentioned that you read a lot of books, especially at the beginning of your career. Which book has a big impact on you and your mindset and your business?
Yeah, like I said, Psycho-Cybernetics by Maxwell Maltz. That's one of my favorite books. It's really a book on self-image. It's a book to teach you how to create a winning self-image. So that book was really a game changer for me. Another good one was Napoleon Hill, Outwitting the Devil. That's a great book. I like. I read that a few times. There's tons of books. As you can see, I have a bookshelf over here. I have another one over there. I love to read. I think that it's important. I mean, in my ritual, I have 15 minutes of reading every single day. I do my meditation and journaling. So And I love when I travel. I would read
For
probably a
example,
book.
in the morning, like to have a morning, like
Oh, for
read.
sure.
Yeah,
In the
morning.
morning, I'm up early in the morning, and I kind of start my ritual from there and take care of myself first with my exercise, journaling, reading, meditation, yoga, and then I kind of start my day after my foundation is set, and that helps keep the mental equanimity in place and starting the day off right.
Mm. Yeah, that's a great habit. Yeah.
Yeah,
Awesome.
I mean, it takes time to really get into that habit. It's not something that's just easy, but it takes time, and it's definitely worth it.
Yeah, I recently read the book Atomic Habits. I'm sure that you have heard about.
Yes, I have that book. I read that book. Yeah,
Great
it's
book.
really
I
good.
like it. Yeah.
Yeah, I like how it talked about. I think it was a chapter in there where it talked about the guy who did the marketing for toothpaste or something. Was that in there? I think that was a book they talked about. How the guy made. Maybe that was another book on habits that I just read. Yeah, I don't want to go off to a rabbit hole on that. I don't want.
Yeah,
Yeah,
That's all right, man.
Yeah, it was talking about how back in the 40s that in 50s how toothpaste wasn't the thing. Like people really didn't brush their teeth until there was marketing that would involve in it. What the guy had to do to create a habit was there's a sensation that comes along with people wanting to do stuff. And it was talking about how everything is marketed, like the McDonald's fries, like when you take a bite of it, the salt, the crisp, and all that stuff, which creates a habit of a sensation that people cling to. And that's how people create a habit. So it was saying in order to create a habit, it broke down the different parts of the brain. One part that creates a habit, one part that's a sensation. And it talks about how do you create good habits is by having something that has a good feeling to it that people can adapt to. And then they always wanted to make it a habit.
I think it was the freshness taste and also Listerine. They did the same thing where it didn't really need to burn your mouth, but they made it burn your mouth because you felt more.
Yeah. That's the same thing they said about the toothpaste. Yeah. That give it tingly feeling and feel like it was working and everything else, and that started to make it sell. Yeah.
It's crazy. It's almost like hacking your own psychology, right? Tricking yourself into success, and and that's important. Like I remember when we started, we have another company, a brokerage called Smart Realty. I remember when we said, okay, we're gonna create this mobile on-demand real estate brokerage firm, and Chris did the design for the smart cars, and I said, I'm all in. I'm going to buy 4 smart cars to get started. And we went to the dealership, and my wife was like, oh man, you're gonna really spend 40 grand to buy these cars? Like, yeah. And why? Why I did it? Because I realized that if you didn't take bold action, it's going to happen. Had I just, let me just get one, right? It wouldn't force me to do what was necessary. And I think a lot of times we got to trick ourselves into making the leaps and making the jumps. Like, for instance, the billboard, for 16 years, we had that on hold. And, we had to realize that, listen, we're going to take this money that we made and we're going to do something bold with it. And we've never done this is our first billboard. We said, boom, we're just going to put the money up and do it. We don't even know if it's going to succeed. We hope it will, but we don't know because it's not the normal course of how we get leads. So I think a lot of times you have to hack yourself. And if anybody out there listening, this man has done it, right? And, all the obstacles he's been through, he's made sure that he's been able to find a way to do it and take bold action. That's why somebody could give him $15 million to invest. And he said that's a small fund, right? He's looking at 100 million next. So, I want you guys to really, listen to this man and definitely follow him on Instagram, Facebook, look him up and definitely reach out to him. Fuquan, we lost Mike, his computer crashed, but any final words for the people? This is the masterclass in houseflipping, and you are definitely a master Jedi. So, any final words or thoughts for the people who are interested in the industry and, want to get busy?
Yeah, for sure. Thank you for having me on the show. I really appreciate it. Always like sharing my experience with the group. I would just say really figure out what the one thing is and build mastery in it. and stay focused. That's what really has helped me over the years. Just staying focused and just being relentless about it. And you know, of course, getting a mentor and surrounding yourself around the right people. That's pretty much it.
Absolutely. So wonderful advice. So once again, thank you very much, Mr. Fuquan Bilal. Michael Teague, he had a problem with his computer, but you know, he'll be back hopefully next week. Timmy and Chris, thank you very much for you know, jockeying this on the back end. And I want to thank you again, Fuquan, for being a great host. All right.
No problem. Thank you, guys. All right, Timmy and Chris, appreciate you guys.
All right.
Thank you.
All right, Fuquan. We'll talk soon, brother.
Thank you.
Take care. All right.
Bye.